if the really important thing is crypto right now is $2.7 trillion industry. It'll probably finish this cycle at $10 to $15 trillion. And by 2030 or so, it'll be $100 trillion, right? This is the largest, fastest accumulation of wealth in all human history. It's as simple as that. That's what that chart tells you. Now, what everybody does, and Howard, you explained, there is a bell curve. And you want to be on the left of the bell curve, which is actually the same as being the Jedi Master on the right of the bell curve. Everybody in the middle who overthinks it, it's simple. Number go up. That's the whole crypto thematic that you need to know. You can either do all the deep dive, and I must have done 10,000 hours on this, and I might be at the right side of the curve sometimes, but I don't mind being the left either. Just don't overthink it. The moment you overthink it, that's when you get yourself into trouble and you start not seeing it for what it is, you see it for what you want it to be.
RaoulPal emphasizes the significance of the cryptocurrency industry, which currently stands at $2.7 trillion. They predict that this figure could reach $10 to $15 trillion by the end of the current cycle and potentially grow to $100 trillion by 2030. They assert that this represents the most substantial and fastest wealth accumulation in human history. In discussing investment strategies, RaoulPal employs a simplified approach, likening it to a bell curve. They suggest that the ideal position is on the left side of the curve, which they equate to being a Jedi Master. This metaphor emphasizes the importance of not overthinking investments and instead focusing on the straightforward principle of number go up. They discourage dwelling too much on intricacies, as it can lead to misinterpretation and trouble, urging investors to see crypto for what it is rather than what they want it to be. RaoulPal acknowledges their extensive experience in the field, having spent thousands of hours on crypto research. They admit that while they may sometimes find themselves on the right side of the curve, they are comfortable being on the left as well. The overarching message is to avoid overcomplicating investment decisions and to adhere to the fundamental principle of the crypto market. Simple number go up. Overall, RaoulPal message underscores the remarkable growth potential of the cryptocurrency industry while advocating for a straightforward, non-overthinking approach to investment. But before we proceed, please remember to show your appreciation for this video by giving it a thumbs up and make sure you're subscribed to Investing Money for more insightful content. And turn on the notification bell so you don't miss future videos. Now, let's continue with the video speaking.
Is 80% of Bitcoin holders don't sell ever.
Yeah, correct. They're in cold
Right?
storage.
And it's the same with Ethereum, with the staking and everything else. So your actual supply is 20% plus the miners. The miners keep getting halved every 4 years. So you've got no supply. So that's 20% of the let's say of the entire asset class, 2.7 trillion is actually available to buy. You bring something like an ETF and things go bananas, right? The more people who adopt it, the more the price rises. Also, the really key thing is, I don't know if you guys have ever seen the chart from Fidelity about the risk reward of assets. It's brilliant. So there's this big white page, all Fidelity branded, and here's a cluster of all of here's the NASDAQ, and here's gold, and here's oil, and here's all of that. They're all clustered in the bottom. Then there's a blank page, blank page, blank page, blank page, blank page, dot, Bitcoin. It's a alien asset class. We have never, ever had an asset class with this risk reward over a long-term time horizon and this performance in all of human history.
Bitcoin's recent price volatility over the last 30 days has settled at around 4%. A significant drop from the nearly 18% observed back in April 2013. This decreasing volatility is signaling a shift towards a more stable asset, resembling traditional equities. As the countdown to Bitcoin's halving continues, and the frenzy around Bitcoin ETFs grows, we find ourselves just weeks away from this monumental event. Traditionally, Bitcoin halvings have been accompanied by substantial spikes in volatility, often leading to sell-offs of 30% to 40%. Followed by sharp rises to new all-time highs within an average of 480 days post-halving. However, the introduction of the spot Bitcoin ETF has disrupted this pattern. Now, instead of focusing solely on post-halving behavior, we must closely examine the asset's current volatility. In recent months, Despite the anticipation surrounding the halving, Bitcoin's corrections have been relatively mild compared to previous cycles, with drawdowns not exceeding 25%. The latest downturn saw a modest 15% drop before Bitcoin rebounded towards the $70,000 mark. This subdued sell-off suggests a more subdued rally post-halving. While Bitcoin is expected to experience the customary post-halving sell-off, followed by a new all-time high, returns may not be as dramatic as in previous years, such as the over 600% increase witnessed after the 2020 halving. This shift can be attributed to two main factors: the growing number of long-term Bitcoin holders, with over 70% of the circulating supply held by these holders, and the arrival of the spot Bitcoin ETF. The spot Bitcoin ETF has been absorbing more BTC supply from the market than miners can produce, exacerbating scarcity and driving upward price movements. On average, the spot BTC ETF has been acquiring around 10,000 BTC per day since its launch, while miners are generating only 900 new BTC daily. In summary, while Bitcoin's upcoming halving event is still anticipated to impact its price trajectory, the landscape has shifted due to the emergence of the spot Bitcoin ETF and the increasing number of long-term holders. This dynamic suggests that while returns may still be promising, they may not reach the astronomical levels seen in previous halving cycles.
Discovered this chart back in 2020, and what it is the number of active wallets in crypto.com measure this, versus the, active IP addresses of the internet. And I always thought, well, this is a network adoption model, the same kind of thing. It's an adoption of a technology. And I wonder what they look like. And I put them over each other. And what we found was that, obviously, because the internet was the rails that already exists, the adoption of a new technology that uses those rails is faster. And it's actually twice the speed of the internet. So if you can get your heads around how big the internet was for all of us, this is happening at twice the speed. It's driven the fastest appreciation asset of all time. The compounded annual returns of, let's say, Bitcoin is about 150% a year, even with 80% drawdowns 4 times in the middle of it. We've literally never been given an asset like this with an adoption like this. And going forwards, if we just assume that the rate of growth just matches that of the internet from here until the end of 2025, we end up with 1 billion users. And if we extrapolate that out to 2030, we get to 4 billion users. So basically, this is a pervasive technology that's going to take over all of our lives in ways we don't really understand. It's not just going to be about investing in cryptocurrencies, it's just going to be the underlying rails of transaction. If I'm right that this is the fastest, largest accumulation of wealth in all human history, right? If it goes to 100 trillion, to JC's point, this is the S&P is worth $50 trillion, or the US stock market, entire US stock. That's 100 years of accumulated
It's
value.
mostly S&P, Raoul.
Yeah, it is. It's 100 years of accumulated value, and we're going to double that in a decade. It's like, this is la la land, right? The amount of money that's going to get made here is la la land. So what do they do with the money? I was speaking to a very famous hedge fund manager yesterday, and he asked his son this, and this guy's deep crypto, and his son is too. And his son's like 25, 26. He said, what are you going to do when you make your millions? He's like, well, I'll keep it in crypto. He's like, but when you take any money out, what will you do? He said, I'll buy property. And his dad was like, well, do you want to buy a super yacht or anything like that? He goes, no, it's a waste of money. So I'll buy property because it's an asset, and I will buy NFTs.
In 2020, a chart comparing the number of active wallets in cryptocurrency to active IP addresses on the internet was discovered by the speaker. This comparison led to the realization that the adoption of cryptocurrency technology is occurring at twice the speed of internet adoption. This rapid adoption is attributed to cryptocurrencies, utilizing the existing infrastructure of the internet. The speaker predicts that if this growth rate continues, there could be 1 billion cryptocurrency users by the end of 2025 and 4 billion by 2030. RaoulPal suggests that cryptocurrency technology will become pervasive in everyday life, not just limited to investment. They argue that cryptocurrency will serve as the underlying infrastructure for transactions. RaoulPal believes that cryptocurrency represents the fastest and largest accumulation of wealth in human history. They project that if cryptocurrency reaches a valuation of $100 trillion, it would surpass the value of assets like the S&P 500 or the entire US stock market accumulated over a century. In a conversation with a hedge fund manager, RaoulPal discusses the potential uses of wealth accumulated through cryptocurrency investment. The hedge fund manager's son, deeply involved in cryptocurrency, plans to keep his wealth in crypto and invest in property and NFTs, considering them as valuable assets. This conversation highlights the changing perception of wealth management in the context of cryptocurrency investment. Share your thoughts on RaoulPal insights and the future in the comments below.